Okay, very good morning to everyone. It's Tuesday, 27th of February. Hope you made it in safe and sound. No snow, obviously awfully cold, so I hope you're all wrapped up warm. Looking at the charts this morning, just to get straight into things, and there's nothing really too stand out that you can see just switching on your charts this morning. You've probably heard of some single stock movement. For example, Sky shares are up about 20% this morning. Big M&A deal potentially announced. Comcast looking to take over the firm for just over £22 billion. Quite a few earnings still trickling through as we come to the tail end of a lot of the UK and European companies reporting as well. But this is very much more single stock specific rather than broader macro events that are moving the overall asset classes that we're looking at. So overall, both major FX pairs, Euro-dollar and cable, in the top left-hand corner in slight positive territory. The dollar index pretty quiet overnight, relatively sideways. It's down about 0.1%. You can see here cable already just running into a little bit of resistance on the daily pivots. The pivot level, which also is essentially the 140 handle. Usual drill, I'll let Sam jump on after I give you kind of a news update to look at the market a little bit more technically and from a strategy point of view for execution of trades. So equity markets, again, pretty quiet overall. I mean, much of these earnings reports that are coming out typically are smaller companies at the moment. One thing though to speak of is that the S&P 500 last night finished up about 1.2%. The Dow was up over 1.5%. The Nasdaq was up about 1.3%. So just having a look what that is like in the context, obviously, of the big shakeout that we had back on the, was it the 5th of February? So we had that payrolls number, the wage data popped higher. Then it was on the following Monday when the market kind of got spooked by this fear of immediate high inflationary conditions and what that would mean for monetary tightening, and we had that biggest stock drop in one day since 2011. But the interesting point here is that if you look at the market's recovery since, obviously the VIX has continued to fall, i.e. that volatility levels have started to decrease once again, and equity markets have continued to track higher over and above the closing price that was seen on that payroll day prior to the actual big dip that occurred on the following Monday. So a lot of the talk at the moment, even Sam talking to me this morning, you know, are we going to hit record highs in the Nasdaq again today? So, you know, if you rewind the clock back to about 3 weeks ago, people were very much questioning, you know, is this it? Is this now the overvalued nature of the market? The top, we've rallied so aggressively, particularly on the back of the end of last year on the corporate tax deal going through, Trump's kind of biggest delivery that he's had so far in his presidency. Equity markets at that point at fairly stretched valuations by some people's opinion. You know, was this the moment now that we're going to get a meaningful correction? And the answer to that is no, not yet, at least. Whether or not that will materialize later, yet to be seen. But for the moment, the markets are remaining comfortable, and we continue to just grind out back in towards the record territory once again. Few things then to have a quick look at. Your latest Brexit update, unsurprisingly, coming ahead of the official document that's to come out of Europe, which is actually going to be on Wednesday, tomorrow. Obviously, the paper's already leaking and talking about it. This is a very familiar pattern, which you need to get used to when you're trading the intraday markets, is that whenever there's a big event, particularly these political ones, it tends to get leaked well ahead of the event. So when tomorrow's one comes, we already really know what this document says. And basically, in summary, the EU will demand that the UK remain subject to European court rulings indefinitely under its Brexit divorce deal. So this is the kind of topic about the European Court of Justice, or otherwise referred to as the ECJ. So Brussels will propose a draft Brexit withdrawal agreement that requires the UK to accept the ECJ as the ultimate arbiter of treaty-related disputes. And already this morning you've had everyone's favourite, Bojo, Mr. Boris Johnson, has stated the UK will not remain subject to the ECJ rulings. So already you're seeing Europe making a pretty firm stance with this. I think it's a 100-page document of what they require in order to secure a transition deal. And then the likes of Boris Johnson, Jacob Rees-Mogg, who's obviously part of the leadership of the pro-Leave faction of the Conservative Party, has basically said that, there's no way that this is going to happen in terms of how Europe foresee it. So I wouldn't say there's anything surprising here. Would any of this current stance between the EU and those Conservative members playing hardball make me worry or want to think that I need to be selling the pound right now? The answer to that really is no. One thing I did recognise actually yesterday, I was looking at some of the guys who've just started trading live, and I could see actually on the kind of live risk manager board that a lot of people were trading the pound. One of the things you've got to be very clear about here is that UK related news, because of the timeline of Theresa May's speech this Friday, because of the EU meeting that's coming at the end of March, you're going to see the frequency of Brexit related news intensify. This might mean that the volatility consequently will pick up in the pound. But remember, whether the pound will move is to do whether or not what the news is different from what is currently the expectation. I think there's a bit of a danger here at the moment that some of the newer guys, you'll try and trade every single headline. And every single headline is not market moving, remember. Like I've just said, this EU comment that's come out today, stoking Brexit tensions, let's say, it is not a removal away from the status quo of what is currently the situation. Therefore, I don't see any trade fundamentally. This doesn't shape or change my opinion at all at this point. So again, just be a little bit mindful that you're looking for material difference or change of stance that will create then a big move of strengthening or weakening of the pound and so on and so forth. Ultimately, probably, obviously unscheduled news could come out, but the scheduled things that we do know, I would say Theresa May's speech on Friday was probably going to be the one of which you're going to see a lot more of a meaningful and direct impact on the pound if you were trading it in that respect. So hopefully that just makes a little bit more sense. Alright, a few other things from to round off the headlines. I've just mentioned this already, but Comcast takes on Fox and Disney. In dollar terms, this is about a $30 billion bid for Sky. So if you're looking at the leaderboard of the FTSE this morning, there's a real steep outperformer. Some of the other companies, Provident Financial Group, they're up about 30% after earnings. Persimmon are up about 10.5%. But again, these are all really single stock movers. I don't think this would have too much of a read across for the FTSE overall. If you were looking at that index, because these are smaller market weighted firms. Quick look at the schedule and what's to come. One thing that you'll notice here, you've got BB, BY, HE. So these of course are all of the German state CPIs, so Brandenburg, Hesse, Bavaria, so on and so forth. We've already had the first one come out at 8 o'clock this morning. So Saxony came in 0.4% month on month. The previous was minus 0.8, the year on year 1.3 against 1.4. So the year on year not too much change from what we had previously seen. There hasn't been too much of a reaction thus far in the euro currency as to be expected. For any of the newer guys, although this chart is dated looking at 2010 prices, so the calculations might be as weighting a little bit different, the point still remains that remember, you're going to get each individual state report their own inflation reading or CPI reading, and typically these will come at 8, half 8, 9, half 9, and then we'll get the national German CPI number at 1 PM, of which at that point the market has already priced in what it is that they're expecting. So the 1 o'clock numbers here that you can see on the calendar are really inconsequential because you already know the summary of its parts. So I'd keep an eye on these. The first state that's come out hasn't really had any shocks, so to speak, and as such then most of the German states tend to follow in step with the first one. There typically isn't much deviation between them. Looking further forward into the rest of the day, you do get a batch of European data at 10 o'clock, the business climate, but you get the various different sectors on a sentiment reading for February. But again, these aren't really, I'd classify these more down at tier 2, if not tier 3 level. They sound interesting, but they very seldom have an impact on prices. Going into this afternoon, you've got durable goods coming out of the US alongside trade balance, but really, even though there's quite a lot of data coming out, durables and trade balance will need to be monitored. Housing data, case chiller, things like that, Richmond, okay, consumer confidence will need to be monitored. But all of this, the point being, is probably going to be heavily outweighed by, of course, this chap, Jerome Powell. Now, just to quickly go over the way of which this information is going to be released, there's a very important thing to be aware of. The text of his testimony will be released at 1:30. He will then actually speak at 3 p.m. So at 1:30, he's not actually even there. He's not actually even in the room yet. He doesn't speak until 3. The text, though, of his entire speech, so the most tradable part and the most impactful for market, is going to be at 1:30. So forget trade balance. Forget trade balance and forget durable goods, because if you were looking at those two things in combination with Powell coming out, you've got to put them in a hierarchy of importance, and what Powell is going to say, given this is his first keynote speech, is critical. So that's probably the biggest event of the day. So if you're thinking about trade strategies going forward, is the market really going to be committing in any larger size ahead of such a big event, of which carries a tail risk that he could say something new? The answer to that is no. Most people are going to want to probably sit on their hands. If they're taking any positions, then fairly light in size, because no one wants to get too much involved ahead of the big event. So maybe just keep that in mind as a case in, or a factor for consideration as you go forward. Talking of Powell, what exactly are we looking out for? Well, of course, this is the Fed's dot plot matrix. And so what you can see here are a couple things. Obviously, the single yellow dots define the individual Fed members and where they see interest rates on the bottom axis at the end of each of these years, 2017, 18, 19, 20 in the longer term. The green line is then the median dot plot, i.e. the interest rate curve or trajectory, which has been mapped out across the medians. Now, as you can see here, overnight index swaps are currently tracking below of what the median dot plots are, and so Fed funds futures are also below. This is quite typical. The market tends to be slightly more dovish priced than what the Fed are communicating. But what's key here is, I think personally, Jerome Powell will not shock the market today. I think that he will just continue the same communication stance and line of Janet Yellen, which is one of 3 interest rate hikes. They continue to remain on track. They continue to monitor inflationary conditions, and they continue to be fairly optimistic about the US economy going forward. The implementation of various Trump policies as well will help facilitate that view. So I don't think at this point, particularly in this speech, he's got any need to really rock the boat. I think continuity is key, and I think that's what you're going to hear for Jerome Powell. Don't forget, an interest rate hike is priced for March, and in March we get the latest summary of economic projections. It's then that carries, I think, a little bit of a risk if they are going to move from a 3 to 4 rate cycle, because they're going to need to drop it in early to prep the market for probably the quarterly rate hikes that they would execute if they were going to do 4. Alright, going to leave it at that, and let me hand you over to Sam. He can have a look at some of the charts and setups for you today. But again, just in summary, Powell is the main event of the day, and that's going to happen at 1:30 for the text release. Okay guys, see you in the chat room. Have a good day.
Hi guys, good morning. Let's have a quick look over, actually just before we go into the currencies, just having a look here at the DAX. I'll just bring that into the picture. Just coming down to its low of the day, and the S1 that you've got there. On the sort of the open, we did push higher, almost filled a bit of the gap before coming back down quite strongly. So pivot sort of broken up now. Worth keeping an eye on S1 to see if we can get a push through there, or do find support. FTSE as well, just coming to the lower points of the day. Euro stocks, obviously that correlation with the DAX, looking very similar in that respect. So definitely worth keeping an eye on European markets. Just load up the FTSE, or just give it a second to load up there. I'll just talk about what I can see. UK 100, the code for those using QTrader. Here it is. So you can just see, just finding a bit of support where we did last night. But in terms of where it could go down to, S1 is a sort of an obvious place there to be aware of. But just on the handle, where we have found some good price action before around here, so definitely one to keep an eye on for there going forward. Have a look at the pound this morning, which with FTSE pushing higher, you did have lower. Sorry, you did have the pound pushing higher, and we're just still elevated above what was the previous highs. You can see here, push through, come back, find support on 85, and just sitting about 10 ticks above that level for now. And this is something I think is a good point to make in terms of, just to lower this down now. What you can see, and I've 100% been guilty of this myself early on, is you get a push above the pivot and the 140, and you going long from there, and look, sometimes that's going to work, and it's going to be a good trade, and it goes and whatnot. But you can see here, really key level, just marked up from yesterday morning. Good price action around, hits that, comes back down, and it's always worth just thinking, where did the initial move this morning start, and what was the Asian session highs, sort of close of last night, push through there, come back, get profit taking around here. Where should it then find support? And you can see it comes back down and hits it quite nicely, and then obviously first target pivot, second target high of the day, or stop to scratch kind of thing. So it's always worth just thinking about, is this the point in the market where we're really then going to get the continuation, or is there actually a point where the sellers may look to come in? Look, it comes obviously with experience of the markets and sort of knowing that. So it could be a case of, let's just say the low of the day here, if we were to see a push through, for me, and then I say we hit here, for me now the buyers are then in control, and it'd be looking at where the move really happened, and it might be then that 139.62 is actually where I'm looking to sell, rather than selling initially on that first sort of test. I'd like to see a confirmed break, profit taking to then come back in. But we'll run through that throughout the day. Equity markets just coming down as well in the US. Nasdaq, you can see there, just found a bit of support earlier on around where we're coming to now, so worth keeping an eye for that. S&P just lagging a bit behind, as is the Dow. Probably have a nice sort of trend line to be aware of here. Let me just mark that up, albeit a bit roughly. There you go. Something I would bear in mind there for the Dow. Having a look at the euro. I mean, look, the euro has been a tricky one to sort of trade recently with the choppy price action, but again you can sort of see, similar to what I was talking about with the pound, you have that breakthrough. Oh, let me just rectangle that up. Get the break, and then it comes back down. Where should the buyers look to take profit? Where did this original move start from? And then you get that sort of resistance, and this would have been 145 back down to 430, so a few hours later, in terms of where that move may happen. So euro today, in terms of levels of interest, I was speaking to Charlie about it earlier, about the range that we've been stuck in. Let me just put this on a 60 so it doesn't go so hard to read. You've got the R1 sitting quite nicely on the weekly and sort of end of last week's highs, good range around there, and the lows matching up nicely with S1 as well. Pivot, not a bad area to think about, but then looking back, if we were to draw a sort of line where pivot is, yeah, there's been half decent price action, but it's completely bang in the middle of that range. So it might be worth you know, if you were looking to go sort of your full size, waiting for a confirmed break of the range, or you know, playing that range using the stop above R1 and targeting previous highs, or using S1 and then using any previous lows as a sort of target perhaps for that trade. FTSE just pushing lower. I imagine if we look over at the DAX quickly, you're going to have that testing that S1. There you go. Yeah, look, testing that one test, two test. I wouldn't, you know, necessarily be too keen to go in long, as equities do look heavy, but it's a support area, so anyone short, you know, good place to have taken a bit of that trade off. Looking elsewhere, currency wise, Aussie dollar just coming to the lows as well here. Good support. Again, push through. You got decent support area from yesterday, and I think this is another point as well that I want to make. So put this down to a 15-minute time frame. If we were to get a break of the low in yesterday's sort of support area, you know, the obvious sort of target to look for would be yesterday's low or the S1. But in terms of managing the trade, especially with the more contracts, you have got other areas where the buyers are really taking over. You know, these are 15-minute, you know, candles. You could easily find support on an area like this. So I think it's definitely worth just before every single trade, just thinking about, does your risk reward make sense, and so on. And another example here, there you go, look, where did the move really start from yesterday to the downside? Comes down. Where's it then going to find resistance on this point? And so, you know, yes, you get the classic here, originally at 11.45 yesterday, but think, where did this move start? Where did the sellers really take over? Can they do it again, kind of thing? So my thinking here for the Aussie dollar would be, I'd like to see a confirmed break to the downside, maybe test yesterday's low or the S1, get down to around here, and then see us slowly grind higher and think, well, look, this is where perhaps the move really started. Or you could even go a bit more safer and look to perhaps get in around a retest around here, 78.44, later on in the day perhaps. Quickly have a look at dollar yen, which is just testing the higher point of the range. Look at that, lovely range. There you go. It's not bad. That, keep an eye on here if we were to perhaps get a break through, but I'd be just a bit wary. You know, this is when the longer charts just become a bit more important. You've got the low of the 22nd morning just a bit above here, so, and even then, target wise to the upside, okay, there's a bit of room. If we get a break of the range, it's not a bad place to target before that R1. Pivot acting quite well with that low. So dollar yen, bit of interest there in terms of levels to be aware of, to both the up and down side. So a couple of opportunities I think could happen there. Let's have a quick look over at oil and gold to sort of wrap things up. Oil here, I mean, that's quite a nice sort of trade, upward sort of trend, comes back each day to sort of give an opportunity for those buyers. Let's have a look if we can get a trend line on here. Perhaps, potentially, you've only got the two touches, but something to be aware of there. That's going to lower this time frame down and go into a bit more detail. So the low of the day just going to be marking up there. Obviously, points of interest as well, just to be aware of. So what you can see here, I mean, this is how I would be looking to mark my chart up, and this is just, look, in terms of levels above where we're actually trading, I've got 1, 2, 3, 4, 5 there in a period less than $1. They would all be profit targets, absolutely, especially for oil, you know, in terms of looking to get in the trade. And another example here, where did this original down move this morning start from? Here. And where's it then found resistance? You know, where the sellers originally took over a few hours before. You'll get this a lot, and I think patience is massively, massively important. Just try to think, you know, what the rest of the market is doing. Just because we maybe get a break of this low doesn't necessarily mean the move is going to continue at that pace. But you know, that will come in time. I'm sure of that. But worth keeping an eye on that low. But I would bear in mind this potential trend line that could occur. Also bear in mind the overall sort of pattern that we're seeing. If we have a look at oil just on a longer time frame, You can see, as with all the markets following the beginning of February that came down, we are starting to push a bit higher. So bias overall picture, I would say, to the upside. Finishing up on gold, and then we'll have a quick look back to see what equities are doing. Gold a bit, well, there you go. Pivot for me now is not a level. I'd only consider pivot as an area to sort of take profit, really. The high of the morning, got a bit of a trend going higher, but all these lows would be areas that I'd take into consideration. Perhaps push higher to then really look to have a target of the high of the day could be an interesting point to be aware of. But for me, nothing too interesting as of yet for gold, and a lot of these markets, especially in the afternoon, will be of more importance. And then Jerome Powell speaking could absolutely say something that may move the market as well. So just have a quick look over here to wrap up. DAX finding a bit of support on that S1. FTSE had a bit of a bounce there, getting a bit choppy, and Euro stocks, well, almost testing S1, but just slowing down as perhaps the DAX is looking to bounce there. Any questions, please, as usual, get them in the chat, and if not, I hope you all have a great day.